And with us this morning on our Life Weekly call, we have Brandon Borgstall from North American Companies, who is going to go over their Rapid Builder IUL product and some of the recent updates that they have made to that product. So, Brandon, are you ready?
I am ready. Thank you very much, Kelly. Again, my name is Brandon Borgstall. I'm Sales Development Specialist here at North American Company. We've had some exciting changes on a couple of our products, really, but today what we're really going to focus on is the Rapid Builder. For those of you who are not 100% aware, the Rapid Builder is Index Universal Life Insurance. So obviously the name of the game is death benefit. That's first and foremost. But with the Rapid Builder, we've got three products: Rapid Builder, Builder, and Guarantee Builder in our Index product line. And the Rapid Builder, as you might guess, is really built for some rapid early cash accumulation. So we've made some changes to this product. So it's like I said, it's geared for early cash accumulation. How are we able to do this? Well, there's the 0% premium load. So there's no premium load on the policy. So that provides the insured the opportunity to build some early cash accumulation. And then another biggie with this product is the accessibility. I'm sure some of you have maybe heard, but with the Rapid Builder, we're able to use the Smart Money sale. So we're able to use this product as what we call a Smart Money sale. So a Smart Money alternative. What is Smart Money? Maybe an individual has money sitting in a CD, mutual fund, something of that nature, that it's really earmarked for their beneficiary, earmarked for their kids or whatever. Why not leverage that into a death benefit and have some opportunity to build cash through index performance, and at the same time, with our Rapid Builder, you've got the 3% guarantee. So we're really excited about some changes we've made, and now let's kind of talk about those changes. So with our Rapid Builder, we now have, it's always had the chronic illness and terminal illness. We've now added the critical illness. So we've got the accelerated death benefit endorsement included with this product. So chronic, critical, and terminal. I'm not going to dive too much into that, but the name of the game there is peace of mind for the insured. If life happens, something happens, kind of out of the blue, they've got that available. Those are there at no additional cost, so it's a pay-if-you-use an endorsement, and just provides that peace of mind and flexibility for the insured. We've made some index options changes, so we've added index options to the Rapid Builder and got it up to where we have our Builder and Guarantee Builder. We've got 13 index options, so providing some flexibility again to the insured. We've made some changes to our cap on this, our caps. So what we did, we lowered the cap to 12.5% on the Rapid Builder. Some might say, oh, why'd you do that? That doesn't sound like a good change, a good benefit for the insured. Well, like I said earlier, a lot of individuals are looking at that smart money concept, putting in a large portion of funds, so a one-time premium payment. We have what we call the waiver surrender charge on the product, so we waive all surrender charges on a full surrender of the policy. So we waive surrender charges on a full surrender on the policy. So if something were to happen, like I said, if life happens and unexpected needs arise, we don't want the insured to be cash poor and insurance rich. So we add the waiver surrender charge, and what this does is you've got the 3% guaranteed rate of return. So every 8 years, if the product doesn't perform up to 3%, we look back and credit that 3%. So a lot of agents and advisors are really focusing on that 3% guarantee column. And what this is doing is, so you're comparing it to maybe a CD or a mutual fund. So they're saying, hey, do you know what? You've got the upside of the index performance, but we've got that guaranteed rate of return of 3%. Well, we lowered the cap down to 12.5%, and at the same time, we lowered some back-end charges that are built into the policy that are really paying for those caps. So now in the earlier years, you're going to have a lot better performance up front with the 3% guarantee column. And that's really what a lot of, like I said, a lot of agents and advisors want to be able to illustrate in those first 10, 15 years is that 3% column. And then at the same time, you're able to look at the index performance. So that's really a biggie with the caps dropping. It's really provides us the opportunity to lower those back-end charges and have those nice guaranteed rates illustrate very nicely, as well as having the opportunity for that index performance. So what else has changed? We now have the interest rate bonus.
Brandon?
Yeah.
Can you touch a little bit? I know that some of the folks on the call may or may not be aware of the changes with AG 49 that are coming up really soon.
Yeah.
You know, you talked about lowering the cap on this particular product, but how does AG 49 affect how this is going to illustrate after September 1?
Yeah, no, that's a great question, Kelly. So what's happening in the industry is the Index Universal Life industry is what's called AG 49, Actuarial Guidelines 49. So what's going on here is we're really trying to get all of the companies in the industry illustrating the same way. So it's going to be a lot more conservative. Here at North American, we're actually pretty excited about it because we already illustrate very conservatively. And we feel that this is going to kind of bring everybody into the same range. So what's happening is they're using a 25-year look back, and everyone's going to have to use that. So right now, some carriers are using a 40-year look back, 20-year look back, 30-year look back, 15-year look back. Now everyone's going to conform to the 25-year look back. It's going to be a lot more conservative on the illustratable rates. And please remember, this is just on illustrations. This does not affect how the product's going to perform in real life, but it's really just bringing everybody to the same level when illustrating these Index Universal Life products. So it's going to be a lot more conservative. The max illustrated rate you'll find is going to go down at, I believe, on this Rapid Builder, it's going to have a max illustrated rate of just over 7%. Our other index products are going to be at about 7.4% because they have a higher cap, so they'll have a little higher illustrated rate. So that's the first step of the deal, the illustrated rates. The second step, which is going to be coming down the pipeline, is the variable loan. What positive arbitrage can you illustrate currently on the variable loan? Some companies are allowing 4%, some are allowing 2%, some 3%. Well, now when you're illustrating those variable loans, you're only going to be able to illustrate a 1% positive arbitrage. So that's the biggie in my mind, because a lot of companies do illustrate, currently the variable loans at 4%, and some companies are illustrating at that 4%, and then they're also illustrating 8% index performance, so there they've got the 4% positive arbitrage. That's a big number, and it really inflates a policy in the way it's illustrated, the way it looks to the client, and maybe sets expectations a little too high. So they're kind of wrangling everybody in, and you can only illustrate a 1% positive arbitrage on those variable loans. So at North American, we have a cap of 6%. We currently illustrate, the lowest we can illustrate is 5.8%. So we're very conservative on that, and like I said, we're actually very excited about what's coming down the pipeline here and kind of bringing everybody into the same neck of the woods when it comes down to illustrations. So remember, this is just on illustrations. It does not change the product. It does not change real life performance. It is just changing how everybody can illustrate the Index Universal Life products. Does that cover it, Kelly? You have any more?
I think that's great. And what a great thing to have happen actually industry-wide, so that everybody's kind of on a level playing field, so to speak, product-wise.
Exactly. And like I said, been a long time coming, really, in our mind. So we're really, really excited about it.
All right, well, good. I'll let you continue.
No, that's great. Great question. Thank you. So like I said, the interest rate bonus was 0.5% in year 16 and on. We have upped that to 0.75%. So essentially in year 16 and on, the floor is 0.75%. And the cap obviously will increase over whatever the cap is by 0.75%. We don't necessarily want this product to only be looked at as an early cash accumulation product. We'll also want it to be looked at as maybe a retirement planning product for an individual who maybe is getting into the game a little later. So they're going to get that early cash accumulation opportunity, and at the same time, we want them to have the opportunity to build cash over the long term. So we give them that 0.75% interest rate bonus. We've also got a systematic premium allocation. This is a new feature that is really intriguing in my mind and exciting. Like I said, a lot of the policies are single premium. Really, they're going to allow the policy to be a modified endowment contract, keep that death benefit as low as possible. But with those single premium allocations, some clients maybe don't want to have one index selection. Maybe they want to spread out those index allocations. So now we've got the systematic premium allocation deposit where you can put the money in a fixed account there, and then it'll systematically and automatically transfer funds into the index account and spread out those index segments, so all your eggs aren't in one basket. So we're really excited about that. We've also included the guaranteed insurability rider. This is a situation where maybe you've got a younger individual looking to get life insurance, and obviously when you're younger, you can only get so much life insurance. This provides them the opportunity, at the younger ages, 10 times they can increase their coverage by up to $50,000 in death benefit with no additional underwriting. They can do that 10 times at specified ages. So we're really excited about that. It gives an agent, an advisor, you the opportunity, because we all know it's difficult to talk about insuring a child. A lot of parents don't necessarily get that. But here gives you an opportunity to say, hey, put $50,000 of coverage on them now, and in 10 years, or maybe not 10 years, but over a period of time, you can have 10 options to increase that coverage by $50,000. So if you think about it, that's a really nice benefit, and they have the opportunity to build that death benefit by a pretty substantial amount. Then we've also got some commission option changes. This is something for, obviously, as you as the agent and advisor, we're really excited about. So we've got option A. So this is kind of the traditional life insurance. This is the way it's been over the past. So it's a heaped traditional option. Option B is a heaped asset trail. So this still has some heaped commission, but also has a significant asset trail for 2 to 15 years, followed by a trail that is smaller, obviously, for the remaining of the policy years. Option C is the percent of premium. So this is a percentage of premium, which a lot of annuity producers may feel comfortable with, something that they're used to. And then option D is asset-based. So you get an initial small percent of premium paid in the first year, and then commissions are paid on a significant asset trail in years 2 to 15, and then followed by a smaller asset trail in years 16 and on. The asset trail on option D is usually larger than option B, but is without that heaped component in year 1. So we're providing you, as the agent and advisor, the opportunity to select your specific commission options. When waivers furniture, yeah.
I'd say that sounds great. And if anybody has any questions specifically about what those percentages are, just get a hold of your life marketer here at Premier, and we can definitely help you with what those percentage options are on those different commission changes there.
Exactly, and something to remember there as well is there are some stipulations on whether or not you can use a specific option on what the death, because like I said, a lot of these policies are run with the waiver of surrender charge modified endowment contract. So the death benefit's got to be at the corridor number, the initial death benefit, in order to get all of the commission options. So that's something to be cognizant of. If you have any questions on that, like Kelly said, please reach out to your life marketer there at Premier. They'll be able to kind of answer those questions and get me involved if need be. So when talking about those commission options, when the waiver of surrender charge is elected, so obviously that cash value, if they were to surrender the entire policy, is readily available. There are some chargebacks for the agent if that were to happen. So option A or B, it's a 3-year, so 100%, 75%, 25%. That's A or B. Option C is 100%, 100%, 80%, 60%, 40%. So you've got a 5-year chargeback there. Then option D is 100% and 50%. So obviously there are those chargebacks that do come with the waiver of surrender charge and having the liquidity involved on the product. Another area that's changed, and this is in our software, is there's now a commission report that's obviously for you as the agent and advisor, and you're going to choose which commission option you want to use. So that's on you to choose either A, B, C, or D. If nothing is selected, I believe it'll automatically choose option A. So that's something you're going to want to be aware of and really take a look and just make sure that you fill out that form. Then a couple sales ideas. Obviously, I've talked about that smart money. I don't need to dive too deep into these, but the smart money sale has been a really, really positive concept, been really well received. Like I said, modified endowment contract, keep the death benefit low, provide that cash accumulation. It's coming from monies that the insured, you know what, they have no reason, there's no earmark to it. So why not leverage that for a death benefit and still have the opportunity to build cash? Client review, it's good policy. Obviously bringing a 1035 or something of that nature. Annuity max, legacy building, and then build business concepts. So if you have any questions on any of these sales ideas, again, reach out to your life marketer there at Premier. Feel free to reach out to me. Happy to help with anything on those. And then I do want to talk about another product of ours that we have had a nice change to, and that is our term. We've done a reprice on our term, and at the end of the day, we are going to be 80% of the time we're going to be top 5 on rates on our term now. We've always had a good term product, always been competitive, but we took it up a level. So we're really, really excited about that. And the biggie with our term is convertibility. Convertibility, it's convertible to all permanent products other than our survivorship. And with our 10-year term, 15-year term, 20-year term, it's convertible through age 74. And then on our 30-year term, it's convertible through age 69. So that's really what our big niche has been, is our convertibility and providing that flexibility to the insured. But now, like I said, we took it up another level, and we are going to be at the top of the heap when it comes to our term pricing and our term rates. So that's really something we're excited about. And if an individual converts in the first 5 years on that term product, the accelerated benefit endorsement is included with no additional underwriting. So that's something to remember there too, as long as they're table 4 and table 2 or better to get all those. So term reprice on already a great product, great options for you as an agent and as for your clients as well. So I just wanted to, I guess, throw that in there. Kelly, you've got.
You mentioned that the first 5 years for those accelerated benefits.
Yep.
What happens after that 5-year time
So after
frame?
those, yeah, no, I appreciate that question. After those 5 years, you can still get it, but the insurer is going to have to go through the underwriting process. So obviously creating a little bit of a headache for your client, but it's still available. So agent might ask, well, what happens, or an insured might ask, I go through underwriting, what if I get a worse rate? Not going to affect your rating on the new product. All that underwriting process is for is to make sure they qualify for the accelerated benefit endorsement. So maybe they go from preferred to standard. They're still going to be preferred on the new product, and because they're standard, they qualify for the accelerated death benefit endorsement. Good to go. So they just need to go through that underwriting process to make sure they still qualify.
Great. So basically, if they go through that underwriting process, and as long as they come back at the under Table 4 rating, they should be fine with the accelerated benefits on that new plan, correct?
Exactly. And on the critical illness, it's Table 2.
Table 2 on critical.
Table 2 on critical, but if, say, they're Table 3, then they just get the chronic illness and terminal.
Great. You answered my next question.
Beautiful.
All right. Well, I don't see any questions out here. You know, thank you so much, Brandon, for all of the information. It was good as always. If anybody does have any questions that didn't get answered, or they think of something after the call is over, please feel free to call Premier at 800-365-8208 and just ask for your life marketer. We're more than happy to get those questions answered for you. And in the same token, if you've got some clients that you think that the Rapid Builder or any of those other products might be a fit for, we can certainly get those options put together for you as well. I don't have anything else, Brandon. If you don't have anything else, I think we'll send out these folks so they can get on with their day.
Awesome. Thanks, everybody, for the time, and happy selling.
Thanks, Brandon. Thanks, everyone. Have a great day.